First of all, thank you all and welcome today to join today's webinar. It's a very exciting webinar today on startup investing in India. And I'm personally excited to learn more with you all. And we have today a very special guest, Mr. Ujwal Sutaria. He's the founder and uh, managing director of TDV Partners. Um, I am excited to host him as well as learn about his experience as well as about the startup landscape in India. Welcome, Ujwal.
Thank you. Thanks, Hemant. Thanks for having me.
Yes. And personally, as I see, people are joining from around the world. So this is great to, see everyone here and, learn like as a global community. I think that's amazing to kind of, look at it today. So before we begin, let me quickly share about INRI for someone who's maybe not still aware or give a quick brief introduction. So about INRI, it is a one-stop financial platform for the 32 million Indian diaspora, which is globally present. This diaspora has been ever growing, and we are excited to be building for them. I am an NRI myself, having lived in the States for 7 years now, and I have so far, conversed with more than 2,000 NRIs and OCIs around the world. And having distilled these conversations, we are building this platform to curate, uh, curate our solutions and products that are tailored for this community. And we have been, and so far, how is it going? So, we offer today investments into Indian mutual funds. And as of today, we have more than 10,000 NRIs on our platform from 40 plus countries and having received 30 crore plus investments through the platform. We are excited to be, sharing more updates as we go along. And today is one of them as we are launching startup investing and also having Ujwal speak about it. So, Ujwal, let's take it from there. Let me allow you to share your screen. Okay, try now.
Yes, I can.
Also, Ujwal, I know I would love to have you introduce yourself.
Yes,
You are the best person there, so please.
thank you. Yeah, and maybe I'll start sharing my screen and then can take it from there. Yeah. Can you guys see?
Yes.
Okay, perfect. So yeah, thank you everyone. Thanks for having me, Hemant, and thanks everyone for joining from all over the world. It's my pleasure to be speaking on this platform to the global Indian audience. So it's my pleasure. I'll give you a brief background on myself. So I have been running TDV Partners, which is an early stage VC fund investing in startups globally, right? On focus on Indian founders. So we invest in fintech, gaming, consumer tech, social media, creator economy, spirituality tech, right? And I have invested in more than 30 companies over the last 3 years. And now I am in the phase of growing this company itself, right? Prior to this, I was working with a fund called Innovan Capital, where we invested more than $50 million, which I managed across bunch of companies, of which three ended up becoming unicorns. So I saw the whole journey from Series A to becoming unicorns. So unicorn is a term used for companies valued $1 billion and above, right? So when I invested, they were roughly at $20 million, and I saw them growing to $1 billion plus in valuation, right? So that was a great experience over there where I saw and worked closely with a lot of companies across sectors, across stages. Before that, I was a founder myself. So I've tried building a couple of ventures. One was into cold press juicing. Second one was a sports tech startup where we were making a platform to help people find out places to play and make a booking online. Both these startups were in India. Apart from that, I am an alumni of IIM Ahmedabad and VNIT Nagpur, right?
Ujwal, just a quick question.
Yeah.
Can you check if you are sharing your screen? I am not able to take a look.
Yeah, sure. Screen share is happening. Like you are not able to see it.
Yeah. Is everyone able to see? Just to confirm.
Yeah, we can see it.
Okay.
Yeah,
No.
we can see.
Okay.
Oh, that's
Cool.
good. Thank you.
So yeah, maybe I would like to understand like how many of you have some experience of say startup investing or knowing about the startups. Maybe if you guys can raise your hand, that would be helpful.
You could use the Zoom chat to
Yeah, maybe you can just
yeah,
comment there.
put a question. Okay, you could just react to it.
Okay. So there are a few people, but mostly seem to be new. Great. Anyway, so that's what I'm here for, basically helping you learn more about it, right? So have you heard of any of these names? Anyone? Okay, good. So these are some of the angel investors who have made tremendous wealth, right, over the last few years. They have ended up making like, so for example, Mala Gaonkar, she's US based. She runs the biggest hedge fund by a female, $1 billion plus hedge fund. She had invested in the early days in Nykaa, which is a beauty startup in India, around say 2014-15, and she made a 300x plus return, right? Similarly, Ashish is there. He was the founder of a Helion Ventures, right?
I think you're on mute.
Yeah, Ujwal, I think
Oh, okay. Sorry. Sorry. So you didn't hear anything?
we skipped on Ashish.
Okay. So Ashish ka, so he's the partner of a fund, which was Helion Ventures. And back in 2009, he invested around 10 lakhs, right? Which is roughly say, uh, I would say what, 13, $14,000. And that went on to become 130 crores, right? So he got a 1300x return. Similarly, Harinder Pal Banga, based out of Hong Kong. Uh, so all of these are NRIs, right? Most of them are NRIs. Kunal Bhal is the only one who is based out of India. Rest all are NRIs who have invested in India, which I am also realizing right now. So Ashish again lives in US. Harinder Pal Banga lives in Hong Kong. He was also one of the first investors of Nykaa, and he also made similar 300x plus return. Shweta Rao, she is based out of Singapore, invested in a bunch of startups, and she has 4 unicorns in her portfolio. Right, and she has gotten 150x multiple times. Rehan Yar Khan was one of the earliest investors in, say, Uber equivalent of India, which is Ola, and then bunch of other companies, Durva, Bauxite. And he made enough money to start his own fund called Orias Capital, right? And then we have Kunal Bhal and Rohit Bansal of Snapdeal, who also have ended up making good money. And they have invested in now, I think, 250, 300 startups, and many of which have become unicorns. So these are some of the names of the unicorns, right? I think this is the most important part, right? How the startup investment cycle works. Uh, I think if you should pay a lot of attention to this. So a startup goes through multiple stages. In the early days, when say a founder just has an idea, that is called the pre-seed round, where you are just germinating your idea and trying to learn more about the different spaces which you are building in, and you pick up an idea and then you start building on it, then you build team on it, you start building product, and then you get to revenues, right? So at that point of time, most of the people or most of the founders, they raise money from their friends and family, right? That's how it is. And typically this could range usually less than 500K dollars, right? Once the product is ready, many times people go and raise the next round, which is called the seed investment, which could be say anywhere in the range of 500K to 2 million. And depending on geography, this number could go to even say 5 or 7 million as well. So for like California state particularly, this goes to as high as 5, 10 million as well. right? But anywhere else in the world, this is the range typically. And then comes the growth stage where once say the company has product, they have the team, they have revenues, they just have to scale it, right? Not just in their country, but globally. That is where growth capital is required. And that could be right from series A, B, C, D to N number of series, right? And these could be fundings of say more than 2 million and above, raised mostly from institutional investors, which is big VC funds, hedge funds, and public market funds, right? After that comes the exit stage, where there are 2 or 3 routes of exit. 2 routes which are the most common one are IPO. Obviously, getting listed on the stock exchange is the obvious route, but it is the most difficult one as well, right? Whereas acquisition by a strategic competitor or an acquirer becomes easier route, and that is where a lot of companies get acquired. For early stage investors, like say pre-seed investors or seed stage investors, there is one more route of exit, which is secondaries, where say these late stage investors from series B, C, D, and above, they come in and they buy out your share, right? So that is the most probable case for early stage investors for exit, right? Any questions here? Okay, if nothing, then I'll go forward. So startup investment is obviously the highest risk asset class, and hence it's the highest rewarding as well, right? So typically in fixed deposit, uh, these are again India numbers. You get between 6 to 8%. Mutual fund you can make between 8 to 12%. Stocks you can expect to make 10 to 15%. Whereas in startups, you can make between 50 to 100x, right? But as you go towards the right, the risk profile of the asset class also increases, and only 10 to 15% of the startups succeed, right? So that's where the portfolio, you need to build a portfolio of startups. You cannot just invest in 2, 3 startups and get done. You need to invest in at least 20 to 25 startups over a period of time, and then only you can expect to make a good return, right? If you invest in 2, 3 startups, if you get lucky, then you can make returns. But those chances are very high, right? Then you are depending on luck rather than the science. Yeah. What are the rewards of startup investing? One is obviously you diversify your portfolio, right? Typically, people invest in real estate, gold, uh, stock market, sometimes debt market as well. And then people think about this riskier asset class, which is alternative investments, right? And that is where the startup investment and startup funds come into picture. So it is a good way to diversify. Typically, what I have seen people in my career do is they allocate 10 to 15% of their asset to this startup asset class. The reason behind that is, say, if you lose 10%, which you have invested, through the 90% which you have invested, you can make up in the 1 year itself, right? So you don't lose anything as such. But say if this goes out well and if you can make a return, then this could contribute to almost 50 to 100% of your portfolio, right? And doubling the portfolio within say 7 to 8 years, which is a big reward for the small risk which you are taking. And that's where we'll talk about like how most of the HNIs, ultra HNIs, family offices, they start allocating huge amounts to this asset class. Second advantage is you become part of the entrepreneurial community. You support founders, you talk to them, you are on the edge of the what's happening in the world, in the technology world and otherwise, right? Because a lot of people, you need to stay relevant as well in your jobs or in your business or whatever, and say what's happening in the world. If you are invested, if you have capital invested, then you stay more invested, you learn more, and you get to talk to these founders as well as help them with your skill set or your expertise, right? And yeah, this is like continuous learning from the best, right? Because apart from founders, you also engage with other investors, which are again the set of pool of HNIs, ultra HNIs, family offices. So you get to network with them. You also learn from them a lot. And these are the ones who have the best information available. And in order to make money, information asymmetry is the biggest thing. This is where you also get some advantage, right? And then obviously returns, everybody wants a 100x return. So that is what we are going out for, right? So that's what. This is a very interesting chart. Why startup investment, right? So in the old days, in the 80s, 90s, 2000, companies used to go IPO at a very small valuation, right? So say like Apple went at $1 billion, but Salesforce went at like say 100 million or lesser, right? Same thing with Google. They went at 250 something. Apple went at around, I think, 600 something. And then there was enough upside to be captured in the public market as well, right? But as you see 2010 onwards, and even right now and going forward, the stage at which companies go IPO has grown up significantly. So like Twitter and Facebook went up at 750 and above. But nowadays, if you see current day startups, wherever you are, so say in India, companies are going IPO at 10 billion, right? So for example, Swiggy, which is one of the biggest startup in India, is going IPO at around 11 or 12 billion dollars, right? Whereas over similarly, if you see in US, Reddit, Stripe, and bunch of other companies, all of them went IPO at multi-billion dollar valuation, right? So the upside to be captured by a public investor is very limited versus what you can capture in private markets, right? And that is one of the reasons why people are moving to private investing, because that is where you can make the alpha, right? If you are in the public markets, you don't have much left to be made, right? These are also some of the stats, right? Risk reward ratio. So venture capital has obviously the highest one, which is northwards of 20%, whereas large cap equities, mid cap equities are between 10 to 12% and so on, right? This is one of the interesting things, consistent superior return. So if you see the last 25 years, top quartile VCs have returned around 25%, whereas the whole venture capital index is around 24.9%. Compare that to S&P 500, which would be say around 10-12%, and Russell 2000, which would be even less than 10%, right? Similarly, you can see data of last 15 years, 10 years, 5 years. In all these eras, venture capital asset class has significantly outpaced and given way significant returns than the public markets, right? What are the skill sets required? These are the basics like investment thesis, how to evaluate a startup, which is the most important part, which most of the people struggle to. Then there are obviously a lot of legal jargons, what terms and conditions you need to have, what all rights you should have as an investor and all. And then obviously risk appetite, right? How much money are you okay to lose if at all that happens without losing your sleep, right? This is the most important thing. If you can't, if you lose your sleep over losing money in startups, then this asset class is definitely not for you, right? Because it is a much riskier asset class. But having said that, like at what stage of a company you invest, or what kind of fund size you invest in, as in a VC fund, if you invest, it depends, right? So early stage, if you are investing there, the chances of losing money are way lower. The chances of making, whether will you make 3x or 4x or 5x is the question. Whereas if you invest in bigger funds, there the chances of making, whether will you make say 1x, 2x is also questionable, because it's the law of large numbers, right? And then is the valuation, like how do you value a startup? What entry price to enter, when to exit? These are all the difficult questions, and you need to have a lot of knowledge about what's happening in the market, then only you can do it. Coming to why India and why Indian startups, right? I think there is a golden era for that, right? Right from say McKinsey head to Cisco head to Nilekhani and everyone, right? Everybody is talking about how this is not just India's decade or multiple decades, but it's the whole India's century, right? India is the fastest growing economy in the world, as you can see, right? Roughly at around 6-7% right now, and scheduled to only grow further. And compared to all the other economies, India is way ahead, right? This is very interesting. If you see the largest economies by GDP, India is having the same population as China, but almost 1/5 the size of the economy. So that is the kind of potential which is there to grow over the next couple of decades, which people are projecting, right? India is expected to become the third largest economy, say in the next 2-3 years itself, and then obviously move towards China, right? Uh, this is the per capita income. This is another interesting thing. Currently, India's per capita income is $2,612, right, and ranked 140th. Typically, once the countries' per capita income goes beyond $4,000 is where you see a great spike in the whole economy, right? So India is expected to do that in the next 2, 3 years, reach to $4,000, right? But that is also an interesting part. What like there are different layers of India. It's not just one. We'll talk about it. So this is how the per capita income has been growing over the period of time, right? This is the breakup of the income class, right? Household wise, like the top 2% have their income above 35,000. Then there is 24% the households who have income between 10,000 to 35,000. So these people are anyways earning way above the 4,000 mark, or rather this as well. There is a bottom 38%, which is under 4,000 or 5,000, right? But by 2031, these numbers are significantly expected to grow. From 2%, this is supposed to go to 7%. From 24%, this is expected to go to 46%, right? And this is where all the cream is in India, right? Where there is a lot of opportunity to make money. And these are the people who will make money and spend also significantly, right? So the top India is divided into India 1, India 2, India 3, right? And how it is done, this is a very interesting criteria. India 1 is equivalent of Mexico, which has roughly say 30 million households, having 120 million people, and the per capita income is $15K, right? Which is way above, say, a lot of other economies. Whereas if you see India 2, that is basically the aspirant class. These are like 70 million households, 300 million people, which is say like a US equivalent, but the income over here is 3K. These are expected to grow further, but right now that is what the scenario is. And then there is India 3, which is the sub-Saharan Africa, you can say. These are unmonetizable users, very difficult to monetize at this point of time. And this is where the chunk is, $1 billion people, right? And 1 billion people having income of less than or around say 1K per person, right? So this is something which we won't touch at all. But we are focused right now, or the growth is all over here in India 1 and India 2. And I particularly, as my fund, invest typically at India 1, right, which is focusing on the 120 million Indians, right? Because this is the consuming class. They have the pricing power, they have the spending power, and they are the ones who are consuming all the new kind of products which are possible, right? And they are less risk averse, or they are more risk averse, and they are uh, able to try out new products coming from Indian startups as well, which was not the case, say, I would say 5 to 7 years before, right? These are some of the numbers in India, right, which are mind-boggling. So 821 internet users we have in India, of which 706 million use OTT. People 624 million use it for communication. These are numbers for social media. 435 million are gaming online, and 427 million are doing online commerce, and 294 are already shopping online as well, right? So because of the UPI stack and bunch of digital infra which Indian government has made, doing business online has become much more easier. Transacting online has become much more easier because of the fintech background, right? This is another major shift which is happening. People are moving away from fixed deposit, current accounts, and other savings account and all, right? And now moving towards more riskier asset class, which is say pension, equities, mutual fund, as well as PMS and AIF. AIF is the alternate investment fund. So, but there's still a huge room to grow. It's just at hardly 2% right now. This will go to say up to 10 to 12%. That is what it is in the developed world. This is another interesting part, the stock markets, right? How they are growing. So if you see the stock markets of India, they have grown significantly over the last 3, 4 years, right from 2.5 trillion to 4.3 trillion. But if you see it in contrast to the top two companies in US, it is still smaller, right? Coming to the India startup ecosystem. So these are some of the charts about like the Indian startup ecosystem and where all the funding has gone, right? Which all asset classes, which all sectors has it gone? So in 2020, the investment was roughly $10 billion going into the Indian startups. 2021 was an anomaly where it went up to almost 40 billion. Then it came down to 25, and last year it was around 10 billion. This year is touted to be around 15 to $17 billion, right? Top sectors where investment is happening is in consumer tech, which is say fintech, gaming, food tech, D2C, edtech, right? And then there are obviously the new age ones, which is electric mobility is coming up, generative AI, software and SaaS, right? Those are also coming up. These are the number of unicorn counts. India has around 108 right now. It has more than 112 or 113. And you can see the growth, right? Till 2018, we had only 21. And then in 2019, there were 9, then 11, 44, 23, and so on, right? So it is closing the gap. India is the third largest home for unicorns after US and China. This is one of the most interesting part in India right now, right? A lot of IPOs are happening in India for startups, which is not the case in US or any other geography globally, right? So till now, we already had around 12 to 13 IPO startup IPOs, and the biggest one is yet to happen, which is Swiggy, which is supposed to happen in the next 2 months by before the end of this year, right? And all of them are doing pretty well, and they are making money for a lot of investors. And more importantly, for their existing investors, for their employees, for the founders. And this money will again be reinvested in the Indian startup ecosystem. This is the most important part, right? So that's what. So yeah, these are some of the headlines where people made crazy money. Like in BharatPe, people made 80x returns. In Mamaearth, IPO, the Kunal Bal, Shilpa Shetty, who is the actress, they made 101x return. Ratan Tata made 23,000 times return, which is like 230x return, right? And similar stories, right, all over. Same thing, like these are some of the early returns which are there. Uh, and if you see the asset class of startups, more than $100 billion has been committed to Indian VC funds over the last few years, right? And it's only growing. And this is a dry powder which is awaited to be invested in the startup ecosystem, which will take it further, right? Some of the key sectors to look out for is consumer upgrade, which is the premiumization. So if you recall the slide where I had mentioned India one, which is the Mexico equivalent. So anything targeted to them, be it products, services, or experience, is what will work out well. Then is obviously fintech, gaming, quick commerce is very big in India, right? Now the life in India has become so convenient. You can get anything and everything at your home within 7 to 10 minutes, right? So say in the morning, if you are cooking something and if some ingredient is missing, you just order it, and before the time you end up cooking, it will be there and you can get done, right? So that's what I also do at home, right? So whenever the cook comes in the morning, if she says, Bhaiya, today we don't have sabzi or vegetables, I say start making rotis, and by the time she makes 2 3 rotis, all the vegetables are already at there at my doorstep. So that's how convenient life has become in India, right? Manufacturing is another space which is garnering a lot of interest, right? Because of the PLI scheme of the government. So government is also giving good boost over here. B2B commerce, cross-border commerce is another interesting space. Space tech, energy transition, these are the other sectors to look out for, right? And how to invest in Indian startups? You can do it in multiple ways. One is invest directly in startups, that is getting onto the cap table. The challenge over there is you need to invest bigger amounts. So per startup, you need to invest say 25, 30 lakhs, which is roughly $30,000 and above USD, right? Whereas if you invest through say a VC fund or through a syndicate or through a platform like AngelList or something, there you can invest as low as say $5,000 per startup as well. And if you want to invest via VC fund, where you don't want the headache of managing other things, there you can invest as low as $5K per month as well for 2 years. So which is roughly, I would say $100K, right? So that's what you can do. And what are the requirements to invest in India? If you are, so there are two options. One is you have an NRE, NRO account, OCI, you have DMAT, PAN, Aadhaar, then you can invest directly in the Indian fund itself and invest in them. The requirements, most of you would have, I think, Aadhaar card and PAN card. Some of you might not have DMAT account, right? So that is something which is required because these are the requirements for KYC over here. And in India, the advantage is the fees are much lower than what is globally. If you want to invest in, say, a fund which is in US, investing in Indian startups, then you need to be an accredited angel investor. The requirement for accreditation is basically earning at least $200K or having $1 million in assets, right? And then obviously the KYC happens. But over here, the fees are much higher than what it is in India. So in India, the fees are roughly 4%, whereas in US, the fees are anywhere between 10 to 12%. So these are some of the portfolio companies where I have invested over the last 3 years. A lot of them are YC companies and other companies which have gone on to become quite successful. And we have co-invested with all the top investors, or they have done a follow-on round in the companies where I have invested. This includes, say, Sequoia of the world, Excel Partner, Tiger Global, YC, and whatnot, right? So in my fund one, we had performed amazingly well. Invested roughly in 24 companies, around $2.3 million, which is valued at around 7.3, right? So we have a 3.2x multiple already. 50% of the portfolio company is already raising on to the next round. IRR at which it is trending right now is 101%. And there has been exits as well. So I made one exit where I already returned 20% of the capital to the investors, right? And if you see the benchmark IRR in India is for the pooled average is 20.1%, and for the top quartile funds it's 40.3%. We are more than 5x of the pooled average, right? Because the pooled average is at 20%, we are at 101%. So in case if you are interested in the fund, then obviously you can talk more details about it, how to be done and what to be done. But yeah, that is maybe we can discuss about it later. So why you should be excited about Indian startup ecosystem? This is a very interesting stat. I will give you, say, 10 seconds to read it. Right. So yeah, I hope you let that sink that, right? Well, like just 1% of the US GDP is the investment, but that is responsible for 57% of the total market cap of US and 82% of the R&D spend, right? So that's the kind of impact which VCs have uh, on any country or their GDP, right? And India is the next frontier for that, is what I would say, right? And as India's PM Modi has said, like decade seen as the decade for India, and golden era for startup has just begun. They also announced a National Startup Day in Jan, right? So yeah, it is now your time to start startup investing and utilize it to your advantage. So yeah, I think that's where I'll stop, and we open the floor for questions.
Thank you, Ujwal. This was an amazing presentation. Even some of the stats that you shared, I was not aware, and it's quite enlightening to see, how Indian ecosystem, particularly for startups, is growing, and how one can really think about it and maybe, participate into it as we go along. So everyone, you feel free to use the chat, Zoom chat to ask any questions. We'll just go over one by one as we see and answer. So, Ujjwal, are you able to access the chat?
Yes, I'm able to. So Dinesh is asking, does TDV Partners send out investor relation newsletters or blogs to subscribers? So yeah, this is available only to the investors who have committed capital and are investing with us, right? So it is sent on a quarterly basis. All the updates and everything is sent to them. Do you have a minimum capital requirement to become a retail investor with TDV? Yes, so that is a requirement. Depends on which place are you investing from. So if you are investing from, say, India in INR, then the minimum requirement is around 30 lakhs. If you are investing from globally, then the minimum requirement is $40,000. And this requirement is spread out over 2 years. So say if it is $40,000, that is basically $20,000 a year, right? That's what you need to invest. And this also will be spread out over quarterly, right? So say 40,000 by 8 is what it will be. So basically $5,000 per quarter is what you need to
Okay.
invest, right? So that's what.
Yeah, thanks, Ujwal.
Yeah.
So,
Uh,
as I understand, just to clarify, basically one can invest into startups just like an SIP. Like they could
Correct.
invest
Yes,
on a quarterly basis a certain amount that adds up to 40K in 2 years.
correct. Exactly. That's correct.
Great, great. That's what is.
I think Nitin is also asking the same question. So I hope I answered your question, Nitin. Is Aadhaar card possible for NRI US citizens? I think that should be possible. Hemant, you can answer that better, I think.
Yeah, so Aadhaar card has certain eligibility and that you have to live in India for 180 days. You may have an Aadhaar already, or if not, then I mean this is the criteria that you need to have. And Aadhaar can be made only in India, so you have to be there. But a question to Ujwal, is Aadhaar absolutely mandatory to invest?
No. So as I told, like there are two options. One is the US fund and one is the India fund. For India fund, it is absolutely required. But for
Okay.
the US fund, that is not required, right? For the US fund, for all global investors, I think US fund is better in case if you don't have Aadhaar. Then you can directly invest in the US fund. That doesn't have any requirement of Aadhaar, but that has a requirement of accreditation,
Hmm.
where the requirement is you should be having salary of 200K independently per year or $300K with your wife, or net assets of or asset net worth of around $1 million, right? So that's what. So then if you are investing in US, then you don't have a requirement of Aadhaar at all, right? So that's what. Yeah, then I think Amit Kashyap is asking, I can I use the income in business to invest with you? Yes, definitely. There are institutions, there are LLCs, there are trusts who also invest in startups. So that is possible. We can enable that. That's not an issue. Harshal is asking, can you talk how fees work out for investment through your fund and how do they differentiate from the original GP fees? Got it. Harshal, that's a very good question. So for any VC fund, the fees are basically 2 and 20. So 2% is the management fee charged upfront per year for the fund life. So say if it is a 10-year fund, so it's around 20%. My fund is a 7-year fund, so it's around 14%, right? So that's the management fee which is charged at the time of investment. At the time of exit, you charge carry, which is the percentage of the profits. So right. So say if you have invested 100 and 100 has become 400, so on that 400, 20% will be charged, right? Which is around 80, and you will get back 320. So 2 and 20 is the fees for the fund, right? So that's what. Then Shreya is asking, how do you repatriate from INR to USD? Hemant, will you want to take
Yeah.
this? Yeah.
So I think this is a more generic question, not necessarily related to startups, but if you have like for an NRI, you may have a NRE or NRO account, and in case you are looking to repatriate, NRE money is freely repatriable, but for NRO you have to file certain paperwork and you can remit up to or repatriate up to $1 million annually. But I think a question from Ujwal would be like, let's say if an NRI is investing into startups, can they invest from NRE or only from NRO, or both accounts are available? Can you share more light on that? Like what channel
I
would be?
think both accounts are available. NRA is obviously preferred, but both options are available, right? So that is not an issue. And in terms of taxation, also, I think I'll tell you. So Indian government has reduced the tax on startups significantly. Initially, it used to charge 20% as long-term capital gains. In this budget, they have reduced it to 12.5%, and
Mm,
they have got it at par with all the asset classes, right? So now all asset classes in India are taxed at 12.5% for long-term gains, right? And in our case, mostly it will be all long-term because getting exits in less than 2 years won't be possible. It will be a rare event if at all that happens. But most of them will be long-term. And for long-term, it is 12.5%. How it will work out is government does 10% TDS at source, right? So they will deduct 10% and then give you the money.
mm,
And they will be mostly with most of the countries, there is a double taxation avoidance, which is there, right? So you will get a certificate that you already paid 10% tax, which you can produce in whatever country you are, and you can take a rebate for that, right? So that's how it works. And then if whatever additional tax is there, that you will have to pay, which is 2.5% in this case, right? So that's what. I think James had asked exactly that question. So I think, James, I have answered your question. right? Short term is basically depending on your income slab, right? Which is less than 2 years. Long term, I already answered, right? So that's what.
Ujwal, a follow-up question on the exit part. How does one exit? I know you mentioned about the startup life cycle, but given your fund, what does the exit process look like?
Right.
And what horizon essentially would this be?
Correct. I think that's a very valid question. So see, the fund life is 5 to 7 years. How it will work out if somebody invests in the fund is basically you start investing in year one. So year 1 and 2 are investment years, right? Then we let the company mature over the next 2, 3, 4, 5 years, right? So you can start expecting exit, say year 4 or not, because some or the other company exit will happen, right? And then because this amount will be invested in 20 to 25 companies. So per year, I intend to invest in 10 to 12 companies. Over 2 years, it will be 20 to 25 companies, right? So out of this 25 companies, how the portfolio works is basically 5 will go down to 0. And this will come in the initial years, right? So year 3, 4, you will see companies going down to 0. Then the next 5 will give you, say, 1x return. The next 6 should give 5x. The 3 should give 10x and 1 should give 30, 40, 50x return. Depending on that 30, 40, 50x return, our whole fund return will be determined whether we make a 4x, 5x, 6x or whatever, right? But this 1x, 5x, 6x kind of returns, you will start seeing them sporadically over the year 4 to 6, right? And we intend to exit the complete fund by year 7, right? So that is how it will be staggered. So you will keep on getting money as and when the exit happens, right? It is not that you will get it at the end of year 7 itself. In fact, my exit strategy is this, that once a company makes, say, 5x to 10x, in that range it is there, I'll take out the principal plus 20 to 30% on top of it, right? So that there is a liquidity provided to all the investors out there, right? So that is the thought process. In terms of how the exits happen, I'll reiterate the 3 ways. Secondaries is the most common, where, say, the new investor of the series C, D, E, whatever round, they come in and they buy out our share, right? So that is the most common form of exit. Second form of exit is acquisition or merger, which is also quite relevant. In fact, the exit which I got in my portfolio company in 26 months, which is again very rare, happened through an M&A, right? So those events happen. And the good part is IPO is also potential probability, because the IPO cycles in India are shrinking. So for example, Nykaa went IPO in like 8 years. Recently, Mama Earth, which is one of the company, went IPO in like 6.5, 7 years. And Digit Insurance went IPO in again 7 years, right? With time, my sense is that this timeline will shrink further and IPOs will happen even faster. It could be in the timeline of 5 to 7 years, right? So if that happens, then we can expect some of our company also go to IPO and be making bumper returns, right? So that is also possible. I hope I answered your question, Hemant.
Yeah, no, I think that makes sense. Thank you.
Cool. Then we have Sharath. How do we become accredited angel investor if you want to invest from USA? So Sharath, I mentioned, right? So if you have salary of 200K independently, then you become an accredited angel investor. If you have $300K salary in a year along with your wife, then you become an accredited investor. Or if you have net worth of $1 million and above, then you become an accredited. These are the 3 things which are required for becoming an accredited investor in US, right? And that's the requirement of the fund also if you want to invest in a fund, right? So that's what.
Yeah, I've also put up a link from SEC, how they define accredited investor. So
Perfect.
recommend to kind of see that. But
Perfect. Ravi Kiran is asking, can the investment be made as a company? Yes, Ravi Kiran, that can be done. So that's not an issue. Then Gyana Prakasam is asking, is that same case investing from India as well, 30 lakh split pay quarterly? Yes, that's the same. Correct. That will come to like around 3.75 lakhs a quarter, right? Or 1.25 lakh a month. But I'll be taking investments at least a quarterly basis. It won't be monthly basis. So yeah. Is Aadhaar card possible for NRI US citizens? I think that has been answered. Vishwesh is asking, like accredited investor in US, is there any criteria that needs to be fulfilled for a US NRI to invest in India? I think it's the same thing. Nothing different. If you are investing in an Indian fund, you are asking, Vishwesh? If that's the case, in India also there is a criteria of 2 crores, I think, which is required, right? Uh, and 3 crores combined. And then again, I think net worth of 2 crores is required, something of that sort. I think, Hemant, you can maybe just find out and pull that up, right? So
Yeah.
that's what. Sharath is asking, what is the minimum monthly investment if investing from US? So as I told, like quarterly, it will be $5K, right? So you can split by 3, that is 1.67K a month, right? But the investment will happen quarterly, so you'll have to do quarterly payment, not monthly payments. So yeah. Don Purohit is asking, I am in the UK and I'm keen to invest. I have a CA holder and I also have a PAN card, but no other card. I'm looking to get into India fund, but need to taken through the steps. So yeah, matlab you will have to have the Aadhaar card and you will have to have a Demat account, because in India for investor protection, they have started linking all the investments with Demat account, right? So what will happen is you will get shares of the investment which you are making in your Demat, right? The reason being, say in worst case scenario, if some fund goes out of business, then you shouldn't lose your money. That is what government wants. And hence they are mandating that everybody should have a Demat account so that your shares will be there in your Demat. Despite the fund being there or not, you are safeguarded, right? So that's the reason why government has started this rule, in fact, in this September itself. And everybody needs to have a Demat account compulsorily, right? So that's what. So that will be required if you want to invest in India. But I think opening a Demat account is not that big a hassle. You can get it done. There are multiple brokers who help them out and get it done, right? So that's what. Yeah, it's a easy process. As in like easy, I don't know how to define easy or tough, but it's a doable process. Many of my investors from UK, New Zealand, they have done it in the past. It took them, I would say, 2 to 3, or rather 20 to 30 days to open, right? So we also facilitate that, and I think Hemant will also facilitate that. He also has good network over there, right? So that's what. Manoj is asking, if we invest through US fund, does receipts also happen in USD on exit? Yes, that's how it works. Inderpreet is asking, okay. Harshal is asking, what are the best channels from tax perspective to invest in Indian startups? My question is for US citizen investing, but please feel to talk to overseas investors. So as I said, right, if you are investing in startups in India, 12.5% is the long-term capital gains tax, right? So that is applicable for everyone, Indian citizens or not. Whether India and the country where you reside, do they have double taxation avoidance or not, is depending on which country you are from. So with all the major countries, I think that is there. So India, UK, Singapore, Dubai, and not Dubai, but India, US, Singapore definitely has it. Uh, Need to check about other countries, right? That will depend on country to country. Dinesh is asking, reverse investment is also happening in startup space. Indians investing in US, Canada based startups. Does TDV have any experience with that space? Yes. So Dinesh, I have done that in the past. In 21, 22 till mid 22, I used to invest in global startups. Right now also I do. The structure has changed. What has been done is like a lot of investors were Indians. In 22, Indian government came up with a regulation that you cannot invest through LRS route. You need to invest through ODI route. And that brought in a lot of regulations or compliance issues for the individual investors, which was not the case through the LRS route. And that's when I thought like it's not worth the headache for investing Indian investor outside India, right? But there is a way around it, which we do, where we invest in the subsidiary in India, right? Which has a direct link with the holding company, which could be based in, say, Singapore, US, or wherever, right? So currently also we do invest, but that way is there, and through we invest in the subsidiary and have a portion in the holding company, right? That's how it works. Then we are at Rohan. Would you mind repeating what is the minimum amount that needs to be invested? Definitely, Rohan. 30 lakhs in India, $40,000 in USD, right?
And that's 30 lakhs per quarter or
No, over 2 years. That's the minimum. Yeah.
so that's 30 lakhs per 2 years, and then what's the other
15
part?
lakh a year divided by 4. So yeah,
Good.
3.5 lakhs basically. Yeah, 3.75 lakhs a quarter. That is what it will be. Then Sully is asking 220 policy. How does investment goes negative? What's then? So investment, if they go negative, then obviously like nobody is making money. Neither are you making money, nor am I making money, right? So in that case, nothing happens. But the chances of that happening are almost negligible. Worst case, what will happen is we'll make say at least 1.5x kind of string or 1x to 1.5x, right? Because we are diversifying, we are building a portfolio. It won't happen that all 20, 25 companies go down to zero, right? There will be some companies who will be making at least say 5 to 10x returns. So your capital will be preserved for sure. That is something which will happen. How much can it grow is the question which we need to answer. And what I am working or aiming towards is a 4 to 5x on a portfolio level, right? So that is roughly IRR of 35 to 50%, right? That's what I'm targeting. Right now, though, as I told, my record is at around 101%. But I don't know whether it will stay or not, and I won't commit that. Or what I can say is 35 to 40% or 35 to 50% is something which is practically possible for a small fund of my size, which is around say between $7 to $8 million. So yeah. Don Prohit, you are asking if this plan takes 2% per year for 10 years plan, and they also take 20% of the value of the plan at the time of exit. This seems like a lot of fees for the investors to pay. Do investors actually make life-changing profits? Yes, Don. Like this is a standard, right? This is not something which I have invented. This has been happening over multiple decades in the industry for US funds as well as India funds. In fact, the top funds, they charge 3% per year fees and they charge up to 30% profits, right? If you see the top global funds, hedge funds, right? They charge up to 50% of the profit because they are generating also 40-50% IRR, right? Which very few people are able to do it, right? So that's what, and it's profit linked, right? So it's like part of the upside. It's not like if you are losing money, you have to pay, right? So that's what. Hardik is asking, can you briefly describe how pool of companies selected in the fund? That's a very good question, Hardik. So I have a criteria. I have a funding investment thesis. I'll share that. So I invest in pre-seed and seed stage, which is very early, right? I prefer investing in repeat founders or founders with some startup experience or people coming from industry with some key inside knowledge and building on top of it. In terms of sectors, I like investing in platform businesses and exchange businesses. This could be spread across B2C side of things, across the fintech, gaming, creator economy, social, SMB SaaS. I've also invested, and now I'll be focusing more on consumer upgrade, which I mentioned, which is any product, lifestyle services focused on the India one, which is the top 100, 120 million Indians who have the capability to pay. Their per capita income is way higher than the rest of the India. That is what I'll be focusing on. Other very unique sector which I'm investing in is spirituality tech. I think that is India's soft power, which has not been harnessed yet. And there is a huge potential out there to harness it. I've already invested in 2, 3 companies in that space, and I'll be investing in more, right? I feel with India gaining dominance in the global politics as well as economic things, India's soft power will increase multifold. Anyways, we have been exporters of yoga globally, but Indian startups or Indian companies didn't make much out of it. But now with the current crop of founders and technology and everything, we can also make a big upside out of the Indian spirituality, which is like centuries old, right? So that's what. And anything else? So yeah, so that's the thesis, right? That's what. And horizon is basically 5 to 7 years, as I told. So that's the time horizon. Usually funds are 10 to 12 years. I am trying to make a shorter fund and hence not committing very high returns. If you stay for longer, then the returns could even grow further, right? So that's what. So I think that's clear on my investment thesis, how I select and do things. Harshal is asking, are there any fintech platforms in India where one gets access to spectrum of alternate investment assets in addition to access to VC fund like yours? I think NRI is the right platform for that, right?
Yeah.
For NRIs, definitely. For Indians, there are a bunch of platforms which are there. You can Google them. There are tons of them which do debt investing. They do revenue-based financing. You have bonds and you have variety of asset classes, right? There are a lot of options out there.
Yeah, and I just want to add that today we are launching TDV Partners Connect with INRI, and I will just share this link in the chat as well. So this is the dedicated page for connecting with TDV Partners. We partner with them, and if you have more questions and want to reach offline, this is the best way to connect. Go through this link, and below that you will find a contact form. So please reach out to us through that. Thank you.
Then Harshal is asking, does your VC fund more like LP style fund, J curve, then tender interval fund, more opportunities to redeem at regular intervals? So I didn't get your question completely, but I'll try answering from whatever I understood, Harshal. So yeah, it is a J curve kind of thing where investments will happen over the 2 years. Quarterly investment or half yearly or yearly, whatever you prefer, that can be done. Exits will keep on happening. Whenever the exits happen, you will get the money back. But that is not decided or pre-decided, right? Right now, I don't know which companies I'll invest. I keep on evaluating them regularly, and whatever fits my thesis, I select and invest in them. And then we need to see how the company is performing and then keep on evaluating them every year at every round when they are raising to decide whether to stay invested or exit partially, right? So very difficult to determine when that will happen, but it won't be symmetric or anything of that sort. Basis our judgment at each and every stage will decide and then exit, right? But your money during the exit will keep on coming as and when the exits happen. So it won't be like after 7 years you will get all money in one shot, right? You will keep on getting year 4, 5 onwards itself, as I mentioned. So Hill is asking, I have an NRE account. Access says I have to be present in India to open. I think, Hemant, this is for you.
Yeah, certain banks may allow for online opening, but you still have to physically courier documents from where you are. And that process may depend on banks, as I said. So, for example, some banks like ICICI can offer you an online account opening. You have to send documents to India, but at least you don't have to visit India in that case. So, we can help you with that if required. So, please reach out.
Yeah, Sohail, over there, like what I've seen, Hemant would also know, Zerodha also enables you to open your Demat account online, right? In fact, I have enabled multiple of my global investors do it, right, while investing in the fund. So that is also a possibility. Uh, like Zerodha, I'm sure Hemant, you would be aware and you would be working with them as well, right? So at the broker. So that is also one option which is available where you don't need to go anywhere. You can do it from whichever country you are in, right?
Thank you very much.
Swagat, presentation will be difficult to share, but I think the recording might be there, so maybe you can go through that. That has everything.
Yes, we can
Rajesh
share the
says,
recording today.
I joined late, but how does one start the investment process in US or India? So Rajesh, basically you need to commit what amount you want to invest, whether it's 100K, 200K, 50K, whatever. And then the documentation will start, right? I'll share my deck, which has all the theses and everything. You can go through it. Then the documentation onboarding process will start where KYC is required. If you are, say, investing in US fund, then just KYC is required and then you wire the money and that's it, done. If you are investing in the Indian fund, then you need to have a Demat account. If you have that, then also the KYC will happen and the process, you will be onboarded. You will have to sign a couple of documents, which is MOU. And then there is a contribution agreement. These are the two agreements which you need to sign. Once you sign that, then you need to link your account to the fund account and that's it. You are done. So that was, it's pretty smooth and standard. Things could be like in US could be done within say 2-3 days. In US, it could be done within, in India, it could be done with 4-5 days. Right, so that's what. Krishna is saying, what if I don't have 1 million excluding primary residence, can I invest in startups in India? So Krishna, that will depend on the salary thing, right? That's another criteria which I mentioned. 200K independently or 300K along with your spouse. Sagar is asking, can I know more about the Indian startups in which my money will be invested? So Sagar, as I told you my thesis, that's my thesis. As and when investments happen, before investment, you will get to know all the details about the startups, right? It's not that I already have a set of 20 startups where I'll be investing right now. This is a process which will happen over the 2 years. I'll identify startups and keep on investing. And hence money is also called for accordingly, right? So that's what. But before the investment happens, you will get to know all the information about the company, what all they are doing, their pitch deck and everything. You will get to know about it, right? Does the US fund invest in the US startups? So I will invest in some US startups, but I cannot guarantee. And this US startups, basically my thesis is to invest in Indian diaspora founders, right? So say if it's an Indian founder living in US and maybe incorporating a company in US, that is something which we could invest in, right? But if it is say a non-Indian founder building a startup outside India, then I won't be investing in that, right? So that's what. What are the checks and balances that we would not lose money? So I think, Amit, there is no guarantee, right? Checks and balances, obviously, I do all my thorough diligence. I take care and utmost care that I invest in the right startups. But startups are the riskiest asset class, right? You never know what thing could go wrong and they could fail, right? That's the nature of the beast. So despite having all the checks and balances which I do, so I'll tell you what all I do, right? So I do diligence on the founder because at the stage at which I invest in, founder is the most important person. I'm betting on them, right? So founder diligence is done in terms of uh, talking to their current employees, ex-employees, talking to their colleagues, friends, their college mates and everything, right? That's how I do diligence on the founder. Then obviously I do my homework on the sector and the thesis and the growth prospects. What are the things happening globally in US, China, India? I do all that evaluation. And then obviously I do whether this opportunity has a potential to make, say, 3x, 5x, 10x, 100x, whatever kind of returns, right? So all those work is done by me. But having said that, still something would go wrong because there are thousands of variables in a startup's journey, right? Very difficult to determine what could go wrong, right? And a lot of things are there. So very difficult to give any guarantee over there. I can definitely tell what all checks and balances which I take, which I mentioned, right? So that's what.
I want to add just one thing. Apart from what Ujwal's process is, there is, I think, more transparency now into investing in startups, as Ujwal shared,
Correct.
that investing, you will have these shares listed in your Demat account. So you have total visibility into, what you own. And even in case the fund were to go down, you still own your shares, and there is a way to kind of claim that asset later in the future whenever, let's say, the startups exit.
Absolutely.
And there is also a legality, Ujwal, I think would be good to share is like what kind of fund is this in India, which is kind of listed. Is it SEBI approved, or
Yes,
what are the
exactly.
legal regulatory aspect of it, so that I think this
Correct.
will give more
Yeah,
confidence.
so in India, it's a SEBI registered Cat 1 fund. So there are different categories of fund. This is a Cat 1 angel fund in India.
Hmm.
Similarly, in US, it's a angel list fund, right? So which is again SEC approved and everything. So it's a angel list fund which we'll be using. So both are like government compliant. Everything is done, and people have been using them for more than a decade, right? Angel list is, I think, a very popular name. If you Google, you will find out more about it. They have been there in business for more than 10 years and done deals of more than $1 billion worth, right, through the platform. So we'll be using that platform. So that's what. Lokesh is asking from taxation standpoint and also from safety perspective, which option is better, investing in USD in US or USD in India or INR in India? You mentioned about the Demat account protection as well. So yeah, Indian account, I think like if you're investing in Indian fund, you get the shares directly in Demat. So that is obviously more favorable, I would say. If you are investing in the US fund, then the demat thing doesn't come into picture right now. Right? They are also still figuring out how to do that for foreign funds. But obviously your money and everything is safe with the fund, right? So that ways there are no hassles, no challenges. As I told, like $1 billion plus worth of investments have happened through the platform, and people are running multi-$100 million funds on the platform itself, right? So that's what. If you ask me what I would recommend, so if you have, say, Indian Demat account and everything, then I would definitely recommend investing via Indian thing. But if you don't have it, then US is also equally fine. It's much more smoother if you are a US citizen or say global citizen, right? So that's what. But if it is Indian, then obviously it helps, no doubt in that. Don is asking, what is your timeline for this particular opportunity? So Don, this is basically, I have already identified the first investment, which I plan to do by say mid of next month, right? So I'll get started anyways because I have enough commitments for the fund. You can start exploring and getting onboarded because that whole process will also take some time. So I'll be taking commits by say till end of November. That's the timeline which I'm looking at. Right. So that's what. So say another month or 40, 50 days, 40 days type of stuff. Yeah. James is asking, is there an option to invest in startups a la carte and not bundled in a fund? See, there is an option, but not through my fund, right? So if you go to platforms like AngelList and other platforms, there you can pick and choose and select whatever you like, whatever you understand, you can invest. So there are a bunch of platforms which do that. So that option is there. But if you want to invest through my fund, that option is not there, right? Because I'm making that curated portfolio of 20 to 25 companies, which I know, right? So if I give you that option, then it might end up happening that say you invest in 5 companies, but you don't invest in 15. And say if it is not working out right, the 5 which you invested didn't give good returns. But say 5 out of the 15 which you didn't invest, they ended up giving say 100x or 500x return, right? Then you will come and say like you didn't have a good experience with me. So that is something which I'm not allowing. It is, if you are investing with me, you will invest in all the 20, 25 companies which I decide to invest in, right? And all the decisions over there will be made by me because I run it completely.
And I want to just add one more thing. Like I think from an investor perspective, to the audience, one key thing that you have to look at when you're investing in startups is evaluation, right? And this is comes with skill and experience, and I think that's where having invested in a fund, for example, in this case TDV, you are relying on their expertise, and which I think is helpful given you might not be so involved into the landscape in India. And this might be a better way to participate.
Also, to add on to that is, I evaluate 1,000 plus companies every year, right? And out of that, I invest in 10, right? So it's like less than 1% is
Mhm.
what is filtered and invested in, right? So I know what is happening in the market, and money in any asset class is made on information asymmetry, right? Because of my access and having spent 10 years in the startup ecosystem in India, I have the access, I have that information asymmetry advantage in this particular asset, and that is why my returns are also so superior than anybody else, right? So that is the thing, is what I would say. If you are not full-time into it, it becomes very difficult. That's true for any asset class, right? Because this is completely opaque asset class. You don't have any data publicly available, unlike stock markets where you have all the financials and everything. Here, nothing is available, right? It's completely opaque and it's all on information asymmetry. And for that, you need to have the right networks to ensure that you are making the right decision, right? So then we have Sagar is there. Could you share the thesis to help me make decision? I think Sagar, I shared my thesis. Uh, if you have further questions, feel free to reach out. Herschel is asking, has TDV partner invested in a NRI, then forming a partnership? So no, that's not the case. I think we were at different point of times, and that time we didn't know each other. I am visiting over here right now, and that's when I got to know about them, and we happened to partner, right? So yeah, that's what. Don Purohit for the India fund, do you need to have income coming from India, or can I prove income from UK and also prove net worth in the UK? Yeah, that's fine. That's not a issue. You can prove both of that in UK, so that's not a challenge at all. So Hill is asking, what is the average investment and duration for best results? So see, average investment, I'll tell about my LPs, which is there. Right now, the average investment which people are doing is around $100K, right? Uh, this is a special discount because Hemant asked me that why don't you do something special for my set of people? And that's why I reduce it to like bare minimum, which is $40K or 30 lakhs. But all the people who have signed up with me, I have around 30-40 people who have already signed up with me. People are investing anywhere from 75K to 200 to $250K, right? That's the kind of investments which I've been taking, right? So that's what.
Yeah, and I think just to share, I mean, I don't know if Ujwal can share more, but I mean, current investors include, multinational executives of big companies, Fortune 500 companies that are participating in this round, right? So,
Correct.
well, I don't know if you can share more, but, just a glimpse of that.
Yeah, absolutely. I'll give you a flavor of what kind of people are investing, right? And these will become your, say, co-investors. And then we have annual meetups where you can meet them in person or online and all, right? So these are CXOs of top companies globally, right? Matlab, right from the Magnificent Seven to say BCG, McKinsey Consulting, and iBanking top companies like Morgan Stanley and JP Morgan and a bunch of them. We have a lot of founders, unicorn founders who are investing, right? Then there are a lot of partners of top VC funds who are investing. Then there are a bunch of family offices who are investing, right? And then there are mid to senior level leadership in some of the FANG companies as well who are participating. Then we have some set of our alumni network itself who are in great positions and doing amazing work. They are also investing, right? So those are the kind of people. So everybody is an HNI, obviously, right? And from all walks of life. Uh, so that's the kind of network which you will build over this duration of the fund, right? So that's what. Duration, average duration. So as I said, like duration which I'm looking, my fund is a 7-year fund, right? So that's what. One or two exceptions could be there where say of companies doing great, we are already sitting on 100x, and I could see that in say next 1 or 2 years they could raise one more round and become 500x. Then in that case we might extend for those 1-2 investments, but majority of the exits will happen by year 7 itself, right? So that's what. So average duration you can say 7 years is what the fund life is, right? Muru is asking 2% fees per year to be paid upfront for how many years need to be paid. So 7 years is the fund life, so 14% will be required to be paid. What all the fees to be paid to start with TDV? So this 14% is the fee which is there, right, to get started. And that will take care of all the other expenses, right? My fund running cost and everything is inclusive of that. I'm not doing anything a la carte. 14% there will be GST on top of it if you are investing in the India fund, right? If it is the US fund, then that is also taken care of. So that's what. Amit Kashyap is asking, if I invest through my Demat account in India and understand 3.75 lakh is required per quarter. If later in some quarter I do not have the required funds, what happens to my money, which I already invested? Do I lose all the money which I have invested? So Amit, it would be unfortunate if that happens. Hopefully that doesn't happen. But say in case if that happens, what happens is basically whatever you have invested, you will get their shares in your Demat, as I mentioned, right? But your whole portfolio construction will get broken, right? So say you invest in year 1. So in year 1, I invest in 10 companies. Year 2, because of whatever XYZ is, you are not able to invest. So that money will basically, your portfolio won't be built, right? So you will invest only in 10 companies. So that will stay. That you won't lose anything. If that 10 companies are able to give you, say, crazy returns, then that works out well. If not, then you lose out. So that is what will happen. But that is not going down to zero in terms of the investment, right? It will depend completely on the performance of those 10 companies or 12 companies which we have invested in, right? Harshal is asking, how big is the TDV partner in terms of presence of other investors being in the company? So okay, investors, you mean managing partners, right? So yeah, it is right now only me. I will be running it completely in this fund. I have plans to get partner, but that will be in the next fund, which will be say a few years down the line, right? It will be me, and I'll have two employees with me who will help me out with things. And that's my advantage, is what I would say. The reason being a solo investor, I can take decision much faster, and I can hence win deals much faster from winning perspective. From founder perspective, a lot of time what happens in bigger funds where there are multiple partners and a lot of employees, there are challenges around that. Most of the founders don't get time with the main partner of the fund who does a lot of value add, right? So a lot of founders choose me also for that, because I become their direct point of contact and I work with them directly, right? And I'm able to help them with multiple things. So that's what. How can we reach out to you? I think you can reach out through Hemant and Go NRI. Harshal is asking, what is your opinion about Gift City and investing in India via that channel in alternate investment class? How big is the minimum threshold amount to access investment via Gift City? So I think, Harshal, that option is coming up, but it is still in the early stages, of what I would say, right? It's still not very mature. So I'm not opting for it, but I've heard got a lot of good things about it, right? So that is there, but I'm not completely aware of the regulations or the minimum threshold and everything, right, over there. How can we reach out to you or TDV Partners for further questions? I think link has been shared by Hemant. You can sign up there and we'll take up all your questions and answer whatever you want. Ravi Kiran is asking, I have signed up for few ULIPs in India through Policy Bazaar. If I remember correctly, they advise that cumulative investment that an NRI can make in India is 6 lakhs per annum. Is that correct, or I misunderstand? I am unaware of anything of that sort. I think for investments in my fund, I have people committing 400K, 500K as well, and 100K is very normal. So that people have done. And I'm not the first one, like people have been running funds since ages. So I don't think this is the issue for AIFs. I don't know about ULIPs, so I cannot comment on that. So yeah, that's what. Sohail is asking, so on a 100K investment for 7 years, the fees would be 14K. Yes, that's correct. Is there any other fees? So at the time of investment, it will be 14K. At the time of exit on the profits, it will be 20%. Don is asking, what are your options at the end of year 7? Exit with all profits or accumulated funds reinvested on the next project at the end of 7th fund. So Don, I give that option to you. Obviously, there will be other funds which will be coming up after say year 3, 4 or whatever. You have an option. If you want to further invest in my next funds, you can definitely invest. If you want to invest somewhere else, you can invest somewhere else. We won't be recycling the capital again in the fund, right? So once you get an exit, you will get that money and you are free to decide whatever you want to do with it, right? So yeah, that's what. What's your website URL? I'll share that definitely. There it is. So yeah, I think done with all the questions. I hope I was able to answer all of you well. If you have any further questions, feel free to reach out. Thank you. Thanks a lot for spending some time on a Sunday. And I hope this is helpful. Over to you, Hemant.
Yeah, thank you, Ujwal. This was totally amazing to have you today, learn more about Indian startups, how to invest, what are the nuances there. And I think everyone in the audience would have felt the same. And I really appreciate everyone to be taking time today on a Sunday morning, evening, wherever you are, and actually going overboard more than 60 minutes, the scheduled
Yeah.
times. So really nice to see that today. I will share more information through email. Those who have registered for the event will also share the recording on YouTube. Expect a mail within 24 hours, and you should have more information on that. And obviously, if you need to, if you're looking to invest, this is a opportune time, and you can reach out to us or Ujwal, and we can help you identify better options or more options, basis your personal requirements and situation. Great. So thank you, everyone. Have a good weekend, and also Diwali is coming, so happy Diwali
Yeah.
to everyone, wherever you are.
Happy Diwali in advance, everyone. Have a
Yeah.
great weekend. Thank you.
Bye.